Now, the banks are kind of saying, oh, that's good. That's a good deal. I'll take that. I'll do that myself. Here's something under collateralized. You give me the cash on a 1-year low interest rate loan. And now in theory, I've got all the cash I need to, pay depositors if they're taking the money out. But better yet, I don't have to record the loss. See, because I could sell the bonds in the market and get cash and pay my depositors. But the minute I do that, I've got to mark down my entire portfolio. And by the way, those unrealized losses, estimate probably $800 billion in the banking system as a whole. So you've got $800 billion of buried losses. And here's the Fed saying, we'll give you, 100 cents on the dollar, even though your bonds are worth 80. And you don't have to take the loss because it's structured as a loan, not a sale. So this is a multi-trillion-dollar bailout. It's legal in the barest sense, but it's an accounting game. It's a bailout game of unprecedented magnitude. And by the way, we'll get, a year from now, March 2024, they'll extend the loan. I mean, it's only 1 year. Yeah. Exactly. Right. You're not going to be able to repay this. Who says interest rates are coming down? We'll see, but they're not going to. They're just extended. So, but this goes back to my earlier point. What else you got in your bag of tricks? I mean, you just guaranteed every deposit in the system de facto. You just guaranteed par value for trillions of dollars of government securities that are underwater. You just told everybody they don't have to record any losses. You've just given them all the cash that your printer can print with no consequences. But then they go, what else have you got? There's nothing else they can do. And one more twist on this. Remember what the Fed's been doing for the past 14 months. They've been raising interest rates. Yeah, we know that. But they've also been reducing their balance sheet. I run to people all the time. They bang the table. Hey, the Fed's got to stop printing money. They're printing too much money. They've been burning money. They've been reducing the base money supply for over a year, about a year and a half. Well, now, okay, so the base money supply is coming down. Rates are coming up. But what does it mean if $1 trillion worth of bonds show up and the banks delivering the bonds say, give us the cash? Where does the cash come from? The Fed prints it. So now you're going to expand base money by perhaps $1 trillion or more at a time when you've been pretending to reduce base money. So this completely blows up their monetary tightening. Okay, they're not cutting interest rates. That we'll see what happens there, but they are increasing the money supply by, again, estimate upwards of $1 trillion. So what happened to your inflation fighting? What happened to your monetary tightening? And they just want to pretend. I mean, you do have to be expert to understand all these mechanics, but they're not that hard to explain. I mean, you can just say it in plain English, which is what we're doing. But from a policy point of view, it completely blows up their monetary tightening. That's the point. The universe of people who really understand this, certain lawyers, certain regulators, certain analysts, just experts because it's what they do, is pretty small. But the overlap between that group who really get it and the group who have an interest in making sure no one else understands it is large, meaning they're all in on it. The number of people who really get it, they can raise their hand and say, I'm an expert in federal finance, government securities and repo and off-balance sheet accounting and all that. And I think you're trying to pull the wool over people's eyes. That's like a handful. I mean, and I'm one of them. There are others, glad to say, but and that's the other thing that really I just have low tolerance for, just the lies. If you have to do what you have to do, you don't want the whole system to collapse. I understand that, but you can be honest with people about it. Well, one thing I really like about Britain is every regulators, politicians, they mess up and they make mistakes, and it happens all over the world. But the British are really good at stepping up. They resign. If you've done very badly, you're a minister or head of something and just things go badly on your watch, even if it arguably wasn't from, they resign. So I'll just resign. And Japanese do too. And someone takes their place. In America, we act like nothing's wrong. Nobody resigns. Nobody takes responsibility. I mean, I would have said Jay Powell, Michael Barr, who's the vice chairman of the Federal Reserve for supervision. So he's the guy who wears the regulatory hat. Powell's the chairman. And Mary Daly, who's the president of the Federal Reserve Bank of San Francisco. Why haven't all three of them resigned or been fired? I mean, this was not arcane. I mean, I'll grant, Brian, that you can get into derivatives and crazy off-balance sheet structures, and very few people understand it, and you don't see it coming. Okay, that's true. But this was simple. These were 97% uninsured deposits ready to run out the door with massive bond losses. And they were in like 30-year bonds, 10-year notes to 30-year bonds. It wasn't like you had treasury bills. So you can always sell a treasury bill. You maybe take a little hickey, but not really. So you can have a government security, which is a treasury, almost no credit risk. I won't say none, but almost no credit risk. But there's always market risk. But the thing about treasury bills, 3-month bills or 6-month bills, there's very little market risk. They're not volatile. But when you're into 30-year bonds, forget it. I mean, you can take 20-point hits when you get the kind of interest rates we say, and that's what they had. And they put them in this held to maturity account, HTM, held to maturity. Means, yeah, we own them, but we're going to hold them for 30 years. And so therefore, you don't have to mark them to market, except if you sell them. If you sell one, because you got a run on the bank, you got to mark them all to market right then. And that's what this Fed facility was about. The CEO sold over $3 million worth of stock about 10 days before the collapse. Now he says, well, it was according to a pre-filed plan with the SEC, so it wasn't in response to any news or whatever. What do you have to understand? There are such things, but these pre-filed plans can be part of the scam. In other words, I see it coming, so I'm going to file a plan so I can keep selling my stock. And then if I get accused of insider trading, I'll go, oh, it was all according to plan. Well, who's to say that the plan wasn't part of the scam? And that's the kind of stuff that was going on. The CFO sold a lot of stock. So that's certainly going to be investigated, but you can see this coming. But my point is, a bright high school kid with a spreadsheet could have seen this coming. You don't have to know Black-Scholes in your sleep to see this. It was assets, liabilities, huge uninsured deposits, about $125 billion of uninsured deposits ready to flee, and a comparable amount, slightly more, of the most volatile. Government securities, okay, but extremely volatile, not that liquid in a crisis. That's all you had to look at. So where were the regulators? Where were the supervisors? And they said, well, we sent them a bunch of letters, and they tried out the letters as if that was exculpatory in terms of their regulatory incompetence. It wasn't. If anything, it made it worse, because oh, okay, you actually knew about it and didn't do anything. It'd be one thing if you never went over and knocked on the door, but you did. You saw something extremely risky. You sent them a letter and then didn't do anything. So, and again, this. It's amazing how Washington works. Mary Daly, I mentioned her, she's president of the Federal Reserve Bank of San Francisco. She was on the short list to be nominated to the Board of Governors in Washington to fill the seat that Lael Brainerd left. Lael Brainerd was a member of the Board of Governors. I believe she was vice chairman. But she left to go to the White House in the National Economic Council. She really is smart. She's a big brain. She knows what she's talking about. Very few of them do, but she's one of them. But she goes to the White House, but that's an audition for Secretary of the Treasury, because they're going to throw Yellen under the bus. Yellen knows nothing. If Yellen were on this call right now, she wouldn't know anything we're talking about.